All right, we're live.
Hello, my name is Mike Spirko, and I'm a New York State licensed mortgage loan officer here at Common Fund Mortgage in Syracuse. Today we'd like to spend a couple moments describing the main features of the USDA Rural Property Program. My guest is Jeanette Smith from the Syracuse area USDA office. Thank you, Jeanette, for spending a few minutes with us this morning. Jeanette, over the last several years, we've noticed an increasing interest in USDA property financing. What do you attribute the increased interest to with USDA financing?
USDA financing allows for 100% financing of the sales price. So if the property appraises high enough, you can actually roll in closing costs to include escrow for taxes and insurance, therefore allowing people that may not have a substantial down payment the ability to get into a home of their own.
I see. Now, this is a government program. Are there any eligibility requirements that a borrower or a particular property have to meet in order to be considered for the USDA program?
Because we are rural development, it is a program that is geared to rural areas. When I say rural areas, you have to remember a lot of small towns and villages in the locations that we deal with are actually considered to be ineligible areas. We do have a website that anyone can go into to determine where those eligible areas are, and it has to be a single family home that the clients are purchasing.
I see. What about income? Is there income restrictions or guidelines that you have to adhere to?
There are income guidelines. We go based on the household adult income, regardless of who is on the loan for eligibility. In the central New York area, the income guidelines are quite substantial. A household of 1 through 4 can actually make roughly up to $75,000 and still be eligible for the program. A household 5 through 8 can make roughly up to $98,000 and be eligible for the program.
No, that's excellent. Credit is always a big issue when you're going for mortgage financing. How does the USDA evaluate credit?
For our credit requirements, we're not quite as stringent as FHA and conventional financing might be. We are able to look at the client's repayment ability, and they have to be able to demonstrate the ability to repay the loan on a timely basis. But credit is looked at quite strongly.
With no or very minimal down payments and cash up front from a borrower, mortgage insurance is often included as part of a monthly payment. How does the mortgage insurance with the USDA program, say, compared to FHA?
It is roughly about 1/4 of what the cost for mortgage insurance is for an FHA loan. There's a one-time upfront fee that's charged for the clients to participate in the program, but that can be rolled into the loan also. And then there is a 0.3% annual fee that's included in the principal and interest payment. However, again, that is quite substantially less than what an FHA mortgage insurance is.
So in summary, the USDA program seems to offer the option to a potential borrower that has a good stream of income and decent credit, but hasn't had an opportunity to accumulate enough money for a substantial down payment. At Common Fund, we'd be happy to speak with you to see if the property that you are considering is eligible for USDA financing, and if so, we'd be happy to pre-qualify you at no cost or obligation to you. Thank you so much for listening this morning, and we look forward to your call.